recent report from the WTO shows that China has the biggest number of anti-dumping investigations in the past 21 years and the biggest number of anti-subsidy investigations in the past 10 years. So what's the root cause of this? Is it because China was not familiar with international rules or because of protectionism?
When you are the largest trading nation in the world looks at you. So it is not a surprise that anti-dumping measures are often directed against Chinese exports. It's because China has become a very competitive player. China is the major supplier in many countries, in many markets of important products. So it is normal. Most of the anti-dumping measures are directed against the big players. So the United States, China, the EU, even in commodities, for example, Brazil, India, it's natural that anti-dumping measures are going to be mostly focused on the big suppliers. And of course, China is the largest supplier in the world. So it doesn't surprise me that the numbers reflect that.
China is upgrading its industries from labor-concentrated products to high-tech products. In your opinion, what impact this will bring to China's engagement with other countries in terms of foreign trade and investment? Do you think this upgrade will decrease the number of trade frictions between China and other countries?
Of course, as China migrates to the higher technology end of the production, what may change is the nature of the friction. So instead of being a friction with importers of more low value-added products or competitors of low volume value-added products, now it's going to shift and going to have friction with those who produce high-end technology products. So that the frictions are not going to disappear. I doubt it.
Well, another issue has drawn much attention recently, which is Brexit. How will Brexit affect UK in terms of foreign trade and investment, and how will that affect the EU and other countries as well?
It's difficult to quantify all these things. There will be an impact. There will be an impact on trade. There will be an impact on investments. I think investments even more clearly. Because under the new circumstances, it may well be that the UK will be less attractive to some investors who are looking at the European market as a whole. But that will depend also on the terms of separation. So the terms of separation between the UK and the EU will have an impact, will have a bearing on how investors will behave in the future. So in the immediate future, nothing changes. So they're still members of the EU, but expectations and turbulence and uncertainty, all those things will affect both trade relations and investment decisions.
Do you have any advice for the UK government?
I think they know what to do. They have been looking at this very carefully over the past several weeks since the referendum. They know that confidence is very important in the market. They need to transmit confidence to investors. They need to transmit confidence to producers in the UK so that the decisions that are taken in this environment of uncertainty will not be decisions that will bring the economy down, so that they continue to invest, they continue to take productive decisions which are leading to economic growth and the creation of jobs and employment. Otherwise, we're just going to further deteriorate the economic environment, which is already not very bright.
Great. Thank you so much. I really appreciate it.
No, thank you.
Thank you.
Thank you. My pleasure.